Investors are digesting new information out of the U.S. July retail sales rose 0.5%, even as tariffs resulted in an increase on some consumer prices. Now, add to that the American president is meeting today with Russia's president, Vladimir Putin, to talk about trying to end the war in Ukraine. All right, let's find out how all of this could work through the markets today. Nancy Daoud is joining us. She's a private wealth advisor. Thanks for joining us today.
Thank you.
All right. There is a lot going on. I'm wondering what your take is on the latest retail numbers. So they are up. I guess vehicle sales sort of giving the strength to move that number up. What's the backdrop for stocks looking like to you?
Well, the tariff impacts are modest at best, on the U.S. economy, at least thus far. We have yet to see the full impact. I don't think anyone was terribly surprised, which is why the market is sort of agnostic to all of this. We had great, strong Q2 earnings. AI stocks are accelerating. Everyone expects a rate cut in September. So investors are kind of looking through what would normally be sleepy months, August and September. Of course, we're not done with August yet. But optimism is very stable. Nobody talks about recession anymore. So there's a lot of wonderful things going on. Of course, geopolitical risk continues to be the biggest news on the table, especially today with the meeting of President Trump with President Putin. But we have yet to see what the results of that will be. So we probably want to watch energy prices at this point.
Yeah, you mentioned the optimism that is carrying through this time, which, seems unbeatable. But do you think markets are pricing in the forward path of tariffs? We haven't seen a direct big hit. We've seen sort of smaller steps in that direction. But what do you expect for the second half of the year? Are we still going to see some smaller steps, or are we going to see a bit of a crater?
Well, we really can't predict, obviously, but it's one of two things. It's either going to take some time before we see the full impact, which kind of makes sense, or there's going to be so much growth that it will overshadow it and it will continue to be very modest. Hopefully, it will be the latter, not the former. But, it's very difficult to predict. We have to wait and see and prepare. I always advise our clients, you have to prepare for the worst, but hope for the best.
How would they prepare at this point with so many balls in the air? How are you advising them to do that?
Well, we're in the business of meeting long-term goals, not to make the biggest buck in, this week. So I think it takes a little bit of a thoughtful planning to do that. If there are short-term cash needs, they should certainly be taken off the table and out of the market at this point while markets are up. That would make perfect sense. If you're in it for the longer term, then stay the course and keep checking your appetite for risk. And if you're sitting on the sidelines, for God's sakes, you're missing out a lot. So get in, especially if you're in it for the long term. But it really is a very individual situation. With the one big beautiful bill, we know now that the tax cuts are permanent, and we could do better tax planning around all those lovely gains.
Did the PPI concern you at all, as core inflation was also moving up, even though headline inflation not as much?
It depends on how you look at it. The correlation between the two is not that different ultimately, but it should be of some concern, but it still has to do with the big question mark, and that is when will prices really reflect the tariff impact? And we still don't have that answer.
Where are you landing then? And you touched on this for the Fed rate for September. What are you thinking?
Well, there's a lot of noise that it's going to be 50 basis points, but now, after the inflation reports yesterday, we're really not sure, but we are hoping for a 50 basis points rate cut, 0.5%.
You're seeing all of the sort of fire and enthusiasm around AI-related stocks. Investors can't seem to get enough. They just keep pushing those stocks higher and higher. Do you have any concern about that bubble bursting, or do you think the strength is there to maintain it?
Well, both. There are some companies that the bubble will burst, but some will survive. And it's always it's always, the survival of the fittest in the end. It's who can keep the balance sheet going. But it is a very, very strong growing sector, and it's accelerating at a speed that is dizzying. But not without volatility. So I would caution investors to be very prudent about how they go about this and check your appetite for risk.
Can I circle back to the Putin and Donald Trump meeting in Alaska today? You said we should be watching energy. We don't know what that meeting will bring. We don't know if it'll bring much. The U.S. president has considering sort of cracking down a little bit more on Russian exports of oil. What do you expect as we move through the day on that front?
Well, I would love to have the crystal ball on that, but I certainly don't. I think the meeting will either end in 3 minutes or it might actually be fruitful. We're hoping that it is fruitful because we're looking for some peace and some stability. But if it ends in a very short period of time, unfortunately, that could mean a lot of turbulence, and the markets will likely react to that.
Okay, so for the rest of the year, give me an idea. You're obviously thinking there is still strength in the economy for the rest of the year. Can I look at the start of 2026 and tell me if you expect that strength to continue?
I think it should. There's no reason why it shouldn't, but there's so many factors that could completely reverse that, and the first and the biggest being geopolitical risk. And also, as time goes by, we will see more and more of the impact of the tariffs. And that will also determine the growth of stocks. Remember, when you're buying stocks, you're buying the balance sheet of that company. And how much can they sustain the growth?
Do you see a trade deal with China being done before the end of the year? Canada, we also don't know where and when we're going to land.
I would love to. I mean, this is always a surprise. We can never predict anything in this administration. That's for sure. That's the one thing that's for certain. And we're continually surprised. So I think it would be very positive if there is a trade deal completed by the end of the year. And based on the rate and the speed of how things have been happening so far, that's not so unexpected.
Nancy, I will leave it there with you. I'm out of time. Nancy Daoud is a private wealth advisor for Ameriprise Financial. Thank you.